Yeah, let's do this analysis. All right, so man, how do I do this analysis? I haven't done a full analysis in months or in days now. So all right, so let's start off with the monthly, because I think we're on to the last day of the monthly time frame now. So if you guys take a look at the monthly, you're gonna see and notice that the monthly on gold here is closing up in about 9 hours, right? So you only have like 9 hours until the month ends, until it's August. So basically what that means is that's when the monthly will close, the monthly candle, right? So the monthly candle right now, as you can see, is like around this area on price, right? It's at this resistance here. So if you guys take a look here, yo, thanks George for the tier 1, 2 Georges tier 1s. Thank you paid on both accounts. Yeah, there's a resistance here, guys. So right around here, right? There's obviously a resistance here at, like, what level is this? This is like 1989, and then there's one more resistance here at the what area is this? 1980, right? So 2 levels here: 1975, 1980, right? I'll say pay attention to the most recent. So you probably want to pay attention to like this area right here, because this is where price tapped into last time, or this is where the most recent resistance was last time. And as you can see, you know, with the candle closing back into the ranges, and then the next candle respecting that resistance to continue driving down here, we're coming up to retest the highs now. So it comes down to how we close, basically. So we have 9 hours. Depending on how we close, you could close above the range, it could close respecting the resistance. I would prefer if we can close respecting this resistance here, or even like, not even like, this is the overall resistance, but this body to the left here, because if you can close respecting that area, any given point next month, you could just drive back into the ranges. And I remember telling you guys this before I dipped off. I think we went through this a couple times on a daily time frame, where I was like, yo, whenever you close outside the range on the daily, right? So let's say like you have a range on the daily time frame, and all of a sudden you have a breakout below the range, right? I mentioned to you guys that why I noticed on a daily, or at least the higher time frame, is whenever you close outside the range, it's not that next candle that drives. So in daily's case, it will be the next daily candle. In a weekly, it will be the next weekly. So in this case, like, I wouldn't really see the next weekly drive, but I'll see the month or week or day after that would drive, right? So see how it closes outside the range. If you want to mark up the zones like this for July, right? And you see how you close below, like, what is it, 1920, 1940? I've noticed that you don't initially drive off the range off rip. So as long as you're still respecting the overall major resistance, which is up here, any given point in next month's candle, even though it's closing bullish, could still just rip down and fill the rest of the ranges, right? Because you're still respecting this area here. You're in a huge range from here to basically here. So any given point, this can literally happen, right? You can have a candle that looks like this for the month of August, right? So I'm expecting a pretty I'll say volatile month, pretty aggressive month. Lots can happen. But yeah, as long as you respect, like, you know, 19, what is this? Honestly, like 1960, any given point, this month, next month kind of can just drive down towards 1880, right? That's just where your next range is on price. So that's the monthly, right? Obviously, it's not relevant to like how today's, you know, charts. It's not relevant to you know, our template ranges, whatever we take, right? So it won't, like, just because we're bearish overall for the monthly doesn't mean we're only my bad, we're only open to take sells for the rest of the month. Like, that's not how it works, right? The weekly though does show you that we are bearish. Price closed right at resistance here on the weekly. It actually closed back into the range here. Very weak bearish candle, but again, overall, if you look at the major resistance, this was the major resistance, and you close respecting this area, right? So if you close respecting that area, and you also close bearish on the small time from any given point, you can obviously just dip down to retest the lows, right? So if you understand now that you have this resistance here, and then you have this support here, any given point, this week's candle for the week could just dip down towards this area here, towards 1920, right? So keep that in mind as you're coming up right now, because it can just be a weekly top wick, a daily top wick, right, before looking to drive further down. So there's the weekly. I think the daily time from here is pretty bullish. Yeah, pretty bullish today. However, The weekly is bearish, right? So there's a little bit of it's a little mixed here. It's a little confusing for a lot of those. One thing I'll say you can take note of is the daily has no bottom wick. So I know you closed bullish here and you close back into the ranges. At any given point, you can just fill the range and it can just be a fake out to drive further up. But just be a bit cautious when you're looking at that because the daily has no bottom wick. So any given point, today's daily candle can come down, create a bottom wick, tapping into again this area before dipping up or before even breaking our lows to drive further down. Any given point that could happen, right? And I did expect liquidity to be formed here before driving up. Like even if we were to be bullish on the daily today, I would have expected us to come down to at least these areas to the left here because that's where price tapped into last time before dipping up, right? If you look left here and you scan left to right through all the times that you were able to just dip up and reject and fly back up to the top of the range, which is right here, you're going to notice that, you know, this is the area it would tap into, like 1935, 1940. Right, so that's kind of where I was expecting the daily to drive down today before driving further up. Now, if you go on a smaller time frame, you're gonna see that 1960 here, the level we're at right now, is a pretty major level here, right? You're gonna see that there's this going across here on price. So, any given point, let's drop down to the small time frame and find out. You see how the forward candle here has an hour and a half left, and you just broke all the highs. Again, any given point, you can just flip on the 4 hour time frame because the 4 hour candle closed below the range here, right? Or you can say, yeah, you can say it closed below most recent. Like there's a minor level here, and you can say it closed right at it. I'll just put it as most recent to be honest, because that's where it kind of closed below here, right? So if that's where I'm looking at here, and I understand that any given point this could happen, and you only have an hour and a half left, right? And you don't even have NY open yet even. So that volume could just bring price that could just bring volume into the markets, and that can just flip price on gold on the 4 hour time frame. And as it flips gold on the 4 hour time frame, the daily starts to create that bottom wick as well, right? Because where was the bottom wick again? The bottom wick was 1944. So if that's where 1944 is, any given point, the 4 hour candle can come down and fill that range there to the left, right? So it will make perfect sense. Like even if you were to drive up today and fill the rest of the range here, it's very rare price would just do something like this. It's very rare. Like you're gonna have to see liquidity first, and you're gonna have to see the retest of the most recent ranges. So in that case, I'm expecting to tap into, like, you know, again, this area before dipping up. So I'm trying to see if we can get some sells at like 1960 here, right? I think I posted this on Twitter yesterday. I posted this in the single channel yesterday. I mentioned how there's a bunch of levels here to the left that we've been rejecting off of. At any given point, you can just be creating top wicks for these areas here before making a push down, right? So obviously, can't really enter here just yet. I want to see here, let's drop down to a smaller time frame, the 5:15 and such. So you're gonna see that there's, let's see, so there's a level here on price 1959.333, or let's put it at here 1959.204, and let's put it as what is this? Yeah, 1959.209. That is your most recent support, I'll say. This could be further down at, I think. Yeah, this could be down here. Actually, I'm gonna put it here, the most recent. And then you're gonna see your obviously next support is down here. Where was the 4 hour time for flip? That was 1953. Okay, cool. So 1953 will be the next support. It'll be a lot further down. So I'm just like marking up major levels here, right? So 1953 is a pretty major level. 1956 is pretty decent. Most recent we just tapped into, which is 1959, 1960, right? So this is your resistance here basically, right? Now I'll say there is another resistance up here at 1963, which you can easily break into, obviously like short term in terms of like the most recent couple hour candles where we've been pushing up, right? So this might not even be the flip. You could tap 6-3 before starting the flip here. That is where the wick is on the daily. That's where the resistance is on the 4-hour time frame. So if we could just re-break the highs at 1961 here, so my bad. If we can just like break this high, right, and then after you break the high, you can start to flip bearish or close back inside the ranges below 1960. I'll look for sales coming down. So if you could do something like this on price, where you sort of pop up above the range like this, boom, 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 and then if you were to reject, you'll see this form, right? You'll see like something like this happen. And as this happens here, I'll anticipate this to be your liquidity. It should, if this wasn't the liquidity, then it should be likely going to be like 1963, 1962, 500, right? So if you can tap into that area and it flips and closes back inside the ranges, I look for sales to come down to fill the range now towards 1956, 1953. All right, and this is what I'll be looking for today if I were to take sales. And we're gonna look to take advantage of this push here towards 1956, like a 40 pip range towards there, and towards 5.2 is like 65 pip range-ish, whatever it is. All right. So yeah, chat. That's what I got going on here. That's what I got cooking up. Now it's just a matter of waiting for that to form, pretty much. But you see how it just matches up with every other time frame. It matches up with the 4-hour time frame. It matches up with the daily, right? Like that's what I look for in this case. The 30 minute has no top wick as well. The 1 hour is gonna close here in 20 minutes here. So those are things to take to keep out for it. But yeah, it's just about, you know, waiting for candles to form now and waiting for that to print. That's all that is. Cool, chat. That's the analysis, man. That's the analysis.